Hello, today is Tuesday, the 21st of February 2012, and I know I haven't been planning on doing any of these videos throughout the week. However, I had my program crash on the charts that looked something like this the previous week, so today I've managed to make a new outline for the charts, and the changes, obviously the information of the data is on the left-hand side rather than that of the right-hand side. You had a few different font changes, really nothing big there. And I've added the volatility level. The volatility takes the last three periods. Not the current one, but the previous three periods. And then it weighs up the last one with the most rating, medium rating, and low rating. It compares it within the 100 periods on the screen, and then it decides which of the five levels of volatility between a micro level, a low level, a neutral level, a high level, or an insane level, basically. So it's neutral, and overall throughout the whole period, it's really not neutral at all, but we'll get into that in just a little bit. The Fibonacci levels is automated. It's this low in here, so how important it is. Again, the levels that I gave out a few weeks ago, it seems now, are still in play, but within that level, it did find perfect support within the significant Fibonacci level, and currently over the last couple of quarters, which is from about 6 o'clock on, it's broken above this band pattern. The 18, well, this one's a 20 period moving average, so that's something I got to fix right here. This should say 20 on this one, because I have the 20 because on a quarter day, that works out to the 5-day moving average. That's the reason why this one in particular is the 20-day in comparison to the other ones. But within this average anyway, it's starting an upward trend, and it's breaking within this level. So some previous levels of resistance, just quickly looking here, it looks to be around 33.80-ish or so as a potential level, and then the most recent high is pretty much where the market is coming to right now. Let's move this on to the daily chart now, and on the daily chart, the volatility is set as tiny, but this is probably going to change it to neutral the next day. And that's because we've had some very, very light movements. But this entire range is where silver has been trading at, which is roughly between 32 and change. We'll say 32 and 2/3 to 34 and a half, which pretty much is the level that we are currently trading at as of 17:30 Central European Time or 1:30 New York time. I've talked a lot about these two Fibonacci levels, the 29.44 and 31.68. This is looking majorly like it's a failed move. But all this tells me on a Fibonacci analysis level is that it's pretty much a gimme that it's going to test this most previous high of around 35.67. Exactly 67. That's how good my memory is as I see it right in here. And we should do that with really not much for retracement, although it's possible it comes back down here. But it does look as if this thing is ready to move within the next couple of days up towards that level. When and if, of course, it makes it to that level, I call that a then what situation, because when you have a confirmation of going to a particular level and then you go there, it's then time to then see what the message of the market states. So, for example, it comes up to this level. What's it going to do? Is it going to consolidate, come back, and then give us another indicator of some sort? That's really a lot of times what you're looking for. 3-day chart. Volatility on the 3-day chart is tiny because look at this little tiny-ish little consolidation range in which it's experiencing within the Fibonacci levels of 2610, that's this low, and 4981, which is this high. Basically, when it's below this level, it's bearish. When it's above this level, it's bullish. And to this range which it's at, it is neutral. For the selling from last year, that has pretty much lasted almost a full year in duration now. For it to be a failure, it needs to have a confirmed breakout above this level, which is at 38.91. Let's move this on now to the weekly chart. And its volatility as well is tiny. But then 3 straight weeks with volatility under 5%. And well, currently right now it's in the same volatility, but we're only a couple days into the week. There's still 3 more days left. And as I was stating within the Fibonacci level, anything below this is bearish. Everything above here is bullish. This is neutral. Therefore, for this rally to be that of a failed move, we need to see a confirmed breakdown below this level. That has not happened. Therefore, when it does find support within that level, and it gets above this significant point with confirmation above it. Confirmation usually is where it stays a few days above, convincingly above this level. It's not even above it really. Stays a few days convincingly, or a few candles above it, I should be saying. And at that point there, then the odds would state that this selling looks like a failed move and the bull market is back intact. Alright, let's now move this on to the 9-day time frame. And these dots in here, I'm going to fix that for the next one. It's a new, just made this, so it's really a new spreadsheet to say the least. And the volatility here is tiny. That's because you had this little minuscule candle here. Okay, size one here and a minuscule one within it. Staying above the Fibonacci level. It's currently within this band area, and the band's going downtrend, but you can see it's starting to go sideways. So it's showing a little bit of getting out of the downtrend into neutrality within the shorter term trend, which we've already been seeing on the weekly and 3-day charts. What's important as far as trend line analysis is getting above this trend line. It's creeping in, and on this logarithmic chart, and I even think the linear chart, it is still not above it, but quite frankly, not too far away. Let's move this on now to the monthly chart. Its volatility is neutral, but if we continue a month like this, it's probably going to go to small because you got a small candle right now. It hasn't really done too much in the month. Well, right now it's the 21st of February. The month ends on the 29th. So we got a little over 1 week to go, basically. And within it, of course, we've just had a small correction within the uptrend. And when I say small correction, I say that because it's still above this Fibonacci level, and the number of periods above it, well, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's on the 11th candle within this correctionary cycle. Let's move this on to the quarter chart, and the quarter year chart, that is, and its volatility is set at extreme. Well, the reason for that is because there's been some decent sized candles in here, and the average, quite frankly, well, it's above the average of the last 100 periods. So that's why we're at extreme levels. So we've seen on the shorter term time frames that we're in the low, maybe neutral volatility, which is telling us that we're having low volatility within what is normally a high volatile period. Of course, this is extremely bullish when you're well above this line. You're finding support as of now on this 18-period moving average of highs. And obviously just a 3-candle correction. And so far, maybe it's the 4th one. Unsure on if this is going to be the bottom. But obviously, as this thing gets going again, it could have some explosive size moves, because it's in a extreme volatile bull market. It's had its correction. After the correction, it's not uncommon to continue the trend, if not continue the trend with higher extremity to its movement, which means higher rates of ascent. That's obviously not a surprise because of that. Final one is the half-year chart. It's got neutral volatility. Now, the half-year or quarter-year from like this period on is extreme, but when we look at this on a half-year period, we have well, three, I guess we'll call them neutral-sized candles because the overall volatility has told us we've had some big moves in the past, we've had some small moves in the past, we're pretty much in the middle of that range, so well, my computer told me it's a neutral. And the way it's set up, it's fairly simple. I take the average volatility from the start to the end. Well, from here I started from here, but for all the other charts, the last 100 periods. I take the average volatility for it, then the front-weighted average on the last three. Then I find its Fibonacci retracement of what percentage it is within its highest point and lowest point, and basically if it's below 23.6%, that gives it its micro level. Between 23 and 38 is low, 38 and 61, which is in this case is neutral, 61 to 76 is high, and over 76 is maximum. So that's the mathematics within it. But overall, like I've seen within this chart, there's really no correction except for a small blimp because it's only really a three-candle sideways consolidation. As of now, the market has yet to have recovered from this 1980 fall below here. As you can see, it went lower. It stayed bullish because although it went below this line, it didn't really confirm too much of a breakout, but obviously didn't break below the support level, stating that this move here stayed strong, but again, it hasn't recovered from this level. For me to see a recovery from really point A to point B, whenever a market does something like this and then it goes down, for it to recover, it's pretty much got to break the previous high significantly. So I guess a move up to about 75.80 would make it recover its losses. Alright, thank you for watching. It's extremely doubtful that I'll put up another video this week. If I do, it's either because the market's going insanely crazy or I find some sort of other type of video to put up that's your non-videos like this. Sort of like the one that I did yesterday on the dollar index. Okay, take care. Bye-bye.